Good morning and welcome everybody. I am Jim Keeling, Chairman and Chief Executive of Corbett Keeling, and I'll be hosting the webinar this morning. I founded my company about slightly over 25 years ago to advise owners on selling their businesses and on raising capital. So to kick us off, I came across this quote: there are decades when nothing happens and then weeks when decades happen. And it's a quote by Lenin, who I'm not accustomed to reading much, but it sort of struck a chord. And I thought, crikey, that is what has been going on during COVID, during lockdown. And yes, a lot of things have slowed down, but a lot of sort of change has been accelerated, the most obvious being the relatively smooth transition that a lot of us experienced to home working, but so too in the health and life sciences sector. It's as though rocket fuel has been put under change, and change that might have taken decades to happen has happened in, well, maybe not quite in weeks, sometimes in weeks, but in other times in months. So the question that I felt I wanted to ask to our healthcare and life sciences specialists is, how should business owners in the sector adapt to the new world? How should they change their strategy? What are the opportunities for them, and how can they take advantage of them? So thank you for joining us. Thank you in particular to our panelists for being with us. And perhaps we could start, Paul, Casper, Kevin, with a minute and not much more, please, on your own backgrounds, so that our guests know, as it were, where the answers are coming from and they can gauge them accordingly. And then a minute or two on your view on how the market is changing and how COVID has affected, maybe accelerated, maybe changed the direction of that change. Paul Baverstop, maybe you could kick off with a minute on your background and your views there.
Thanks, Jim, and good morning, everyone. Nice to be here. As Jim says, I bring a background in health and social care, and particularly health tech. My academic background is in the public and private management of healthcare systems around the world, and I specialize in the strategy, policy, and communication of healthcare and health tech. And I have a deep NHS background. I was the director of strategy and communication for Paperless 2020, which was the government's last attempt at digital transfer, not the last, but certainly its former attempt at digital transformation of the health and social care system, which has had mixed results, it's fair to say. So picking up on what Jim said, I want to make three quick points about where we're going. So first of all, the effects of COVID have been profound. They've accelerated in our system the preventive care agenda. So people the system is desperate to move care out of expensive hospital and acute settings and put it into primary, community, and social care settings. That's the first point. The second is that digitization has been supercharged. So we went to almost 90% remote appointments during the COVID crisis. That's fallen back now to 50%, but that in itself is still a huge leap forward in the use of digital tools. But what it has done is expose the ongoing challenge of digital transformation, the need to change models of care delivery. So there's a massive service redesign task that the system is going to be looking for help with. And of course, there's going to be a huge autopsy in the way the system has dealt with procurement in all sorts of arenas, PPE notably. The second issue is commissioning at scale. We're going to be formalizing integrated care systems so that there's going to be vertical integration at larger population sizes, 2 to 5 million. And there's going to be new procurement frameworks that everybody needs to be live to. And a related point, integrated care pathways across entire populations that link community settings with primary, acute, tertiary, and specialized settings are going to be a focus. And there's going to be great need for linking data and churning that data through artificial intelligence so we can deliver precision or individualized care. So those were the quick points I wanted to make.
Well, thanks very much indeed. Very, very helpful. And Kevin James, I'm going to spare our guests your blushes by telling them before I'm going to let you speak, as it were, that you've been a successful, let's say very successful CEO of private equity-backed businesses in the pharmaceutical sector. And maybe you can give us a little bit more precision on that and your view on what's what in the sort of pharmaceutical subset of the market.
Well, good morning, Jim, and good morning, everybody. Just by way of background, very, very briefly, to truncate 40 years into to 30 seconds. I had 40 years in the pharma sector. 30 years of that was in what we term, I guess, big pharma, probably more titled as the R&D sector of the marketplace. Latterly, as CEO of Wyeth Labs. I've also set up my own specialty pharma co, which was also exited private equity, and had the pleasure and privilege of chairing 2 private equity-backed specialty pharma companies as well, one of which is still very, very current. In terms of the changes, and again, it's a very broad subject, but I think it's fair to say it's a bit like the curate's egg, some good bits and some perhaps bits that aren't quite so good. I think, again, pharma industry has stepped up and shown its ability to innovate in difficult times where there are challenges. And I think the evidence there is clearly the speed at which the vaccines have come through into the marketplace, which hopefully is very, very shortly. Again, this is something that the industry is renowned for. It's but not always with the speed, and I think we're seeing this time the speed of that, and hopefully these vaccines will be with us. I think the other element that's come through, and again partly driven by COVID, is the whole repurposing of medicines. We've seen from people like Lilly and Regeneron and Gilead, medicines that were used in different therapeutic areas applied to treating the COVID problems. And I think that may well also apply with smaller pharmaceutical companies that may have drug in their portfolio which have other uses which we haven't really thought about yet. I mean, clearly, again, dexamethasone was used in the crisis, and that's also proved to be very, very effective. I think 2 other small points. Clearly, there's always been good collaboration with academia from industry, and I guess the Oxford vaccine has demonstrated that again. But there's always important to have that trust between academia, clinical scientists, and industry. And the other part of this is also the speed of regulation. A complaint of industry in the past has always been how long it takes for regulators to do things. We've seen with the approval of the vaccines that can be accelerated, which is clearly to the benefit of patient care. Just a brief point on the downside, I guess. Some companies have found during the COVID period, if you like, obviously we know that footfall into primary care, footfall into hospitals, operations, outpatients, all these areas have been affected, and therefore the utilization of drugs has been slow and down in that period. And maybe just to finish, to say that I think one thing that's come through as a very positive thing is if the industry was seen in perhaps a negative light by the general public historically, I think the speed of response in the COVID crisis has probably enhanced that reputation and rebuilt some trust with the public. Thanks, Jim.
Very interesting, Kevin. Thank you. A lot of positives, one or two doses of realism amongst that, but overall a very positive picture. Thank you. And Kasper Stauffenberg from Germany, who is head of life sciences at Carlsquare, the German M&A advisor, and also head of life sciences at global scope, the global M&A advisor, of which our firm, Corbett Keeling, is also a partner. Caspar, do tell us a bit more about your own background and how you came to be doing what you're doing now and your view of the market.
Yes, thank you, Jim. Good morning, everybody. Yeah, as you already said, I'm a managing partner at Carlsquare. We are Corbett Keeling's German partner in mid-cap M&A advisory, and I'm focusing on the life sciences and medical devices industry. Special focus is on medical devices and medical technology, and this comes from my background. I've been running as a CEO medical device companies here in Germany, prepared them for the exit, and then sold them. So I did this as a chief financial officer of two medical device companies, one in ventilation and the other one in orthopedics. And this leads to the fact that I'm still specializing in medical devices. Looking at the medical device industry as from the point of view of an investment banker, and asking the question, what has COVID done to this industry? It's interesting. I would say it's a paradoxon. It's really paradoxical. Why? Because the financial performance, the business performance of many medical device companies over the last year was mixed. So if you look at P&Ls, if you look at financial performance, not so good. Why? Because many of these companies are manufacturing products. They depend on supply chains, and supply chains going around the world, procuring products from Asia have been heavily disturbed. So you will find that EBITDA has gone down, even though sales may have gone up, but some companies just didn't have any business in the second quarter. So coronary stents manufacturers, for example, they could not sell their product because nobody dared to go to the hospital. And some patients have not been even admitted. So if somebody wanted to have an artificial knee, they were not admitted because surgeries were postponed. And even the ones who had high sales and demand, they found it troublesome to procure the product, and they had to do it at much higher cost. So economic performance bad, but, and that's the paradoxical thing, valuations very high. Investors like these assets. They want to buy them. Why? Well, because everybody assumes that these companies will be performing post-COVID as they did pre-COVID. There's no fundamental skepticism about whether these companies will still be around. They have very solid business models, and COVID has shown the need for these type of companies. There's been an increasing awareness that the healthcare sector needs to be equipped better, it needs to be funded better. So you see high valuations, high interest from investors to buy these type of medical device companies. Within the medical device companies, I think we've already said it already, everything to do with remote and prevention and digitalization is surging even more. So there's even higher valuations, higher than the pre-COVID times.
Very interesting, Caspar, thank you. And what you were saying there about the valuation of businesses, as you say, it's slightly sort of counterintuitive. One of the things we've seen across all sectors actually at Corbett Keeling here in the UK is a view taken, we call it the COVID bar chart. We have a picture, historic, current and projected, of the profits of a business pre-lockdown, during lockdown, post-lockdown. And one sees for many sectors and many businesses a profits dip. For others, actually, there can be a profits increase as a result of COVID and lockdown. And but what we then see is that the buyers are, of course, looking at the future, and they don't necessarily at all mark down the value because of a dip of profits during COVID and lockdown. So exactly corroborating what you're saying, Caspar, in the medical devices market, really across the entire spectrum of industry and services that might be provided. Very helpful. Thanks all of you. And now maybe we can go on to questions, and I'm going to exercise my right as chair here to ask 2 or 3 questions that the 4 of us felt would be of particular interest in advance of the seminar, and then we'll move on to our guests' questions. It's slightly rude, that, isn't it? Really, I should do guests first, but I'll continue to follow my script, as it were, or the 4 of us will get a bit confused. Where do you think, Kevin, Caspar, Paul, where do you think the big money is going to be made in the next 3 to 5 years in healthcare and life sciences?
Jim, let me open on that one. Of course, it depends on your definition of big money. To some companies, I guess in the pharma sector, you know, a few £100,000 is big money. To the big pharma companies, I guess they're talking in billions. I think it's probably fair to say that, you know, innovation, which we're talking about with the large companies, will always carry a premium. There's no question of that. To some extent, profit follows the science. If you get the science right, you get the premium for your particular products. And I guess that's demonstrated with the big pharmacos. They're, you know, moving clearly more into pharmaceuticals, away from small molecules, clearly more vaccine innovation, gene therapies now, which, you know, come with a very, very high price. But of course, you've also got a much smaller target audience. You're not into mass market things like hypertension or diabetes. So hence they're a huge premium on that. So I think that's where, let's call it the big $1 billion money is being made. But I guess for the purpose of today's audience, I suspect we've got more companies in the SME category that are listening today. And I think just 2 areas to, you know, by examples. I think we may see some therapeutic consolidation, companies focusing on, say, things like dermatology. There's a couple of good examples of companies focusing on CNS. The group Murex Pharma was exited recently at a very, very nice premium, but that's had a total focus on CNS as its therapeutic focus. And I guess you've also still got in our industry, you know, across Europe and UK to some extent, you know, smaller companies, smaller enterprises. Still in Europe, a lot of family-owned enterprises. And again, one could see consolidation here as well. And you know, with that consolidation, potentially there is an opportunity to make money. Maybe not the billions, but certainly I think maybe getting to the millions with that sort of that sort of approach. So I think that's where the area, the money may be made. I think the big bucks clearly still with the major pharmacos.
Yeah, maybe I add to this. I'm a great believer in Schumpeter, an Austrian economist, and he said it's very easy if you look at the economy. You can make money if you are an oligopolist and you enjoy running the oligopoly, or if you are somebody who's becoming an oligopolist and destroying the ruling oligopoly. And I guess if you look at medical devices, you will find there's in any given market, there's always an oligopoly, 4.5 companies ruling the world, having 85% market share and 15% market share left to 250 other ones, smaller ones. And 3.5 out of the 4.5 are American. So what is the big money to be made? I think COVID is changing the rules of the games. There is huge disruption. So try to be with the disruption and try to be with the major trends. I guess one of the major trends is any tool, any product, any device helping to treat chronic diseases in a remote way. These guys are not going to go away. We will help them not to die too early. They need treatment to the end of their life. And that is increasing, and whatever is helping the treatment there could be invasive, could be non-invasive. But one thing always needs to be happening. These devices, they should not only treat, they should also collect data. So there should be an element in a bigger data play. That's another thing where the money is going to be made. The other thing is less and less material, so more and more minimally invasive, even down to non-invasive. So that's maybe another trend in medical devices. Again, this also plugs into big data plays. So I think that would be my bet.
And I tend to echo what both Kevin and Casper have said. I mean, I do think that as certainly the English health and care system moves forward, you have to be positioned to take advantage of and enable within the system digital transformation so that we can keep more people away from the front door of our system and get people out of the back door into the community and into out of hospital settings, and enable that through remote technology. So it's both the remote aspect, creating that platform across which seamless data can flow, working that data so that we can actually individualize the care and target it on high tariff, so to speak, health conditions, chronic diseases, and indeed increasing numbers of specialty diseases. I think there are two other aspects, certainly in respect to doing business with the National Health Service here. The first is consolidation. There has to be consolidation. I think this is true in social care, but in health tech, there are currently 3,800 registered British health tech companies at the British Health Tech Industry Association. And there are only really 44 clients, 44 sustainable transformation partnerships who are commissioning services. And they are, as you can imagine, struggling rather to keep the lights on. And if you're being flooded with requests from 3,800 providers, this can be a little overwhelming. So you're going to be really careful in positioning. And I think related to that, well, I'd make one last point. So you do need some stamina to work with the NHS. You really got to work those relationships. And then the third thing is commercial innovation models. The NHS is it's very difficult to access to get actual money from. What they're looking for is capacity and efficiency. So if you're prepared to be commercially innovative with things like long-term gain share models, where both the NHS and the provider can benefit financially, you're going to really kind of plug into an accelerating trend in the system. But don't underestimate how little thought has been given to what that commercial innovation looks like. You're going to need to help to form and frame that.
Thank you. And if we were to sort of narrow ourselves down to, I'm going to say a business owner. Well, let's take our market at Corbett Keeling. A business owner, a private business owner, running a business, making 1 to 10 million of profit, and she or he is sitting there and saying, what do I do? What do I do? Is there anything you'd say to them? And I suppose it's a slightly difficult question to answer, because what particular sort of business are they running? But is there anything you'd say to them, particularly about how to position themselves in the current environment?
Shall I start on that then?
Yeah.
I mean, I would say this, wouldn't I, having worked in the NHS, but there is very much, I think, an importance on a posture of partnership with the NHS. It's a club, it's been described as a religion. So there is, in the way that you present yourselves, a kind of delicate balance to be struck between rightly being a disruptive model, but also being a model which is aligned to the delivery of the values of the system. So I think it's very, very important to present yourself in that way, understand the rules of the club, and figure out how to use the language. Talk about the problems that the system has: capacity, efficiency, the desperate need to address three things: an aging population, the complications that brings with increasing amounts of complicated care, expensive to treat later in life. And then a big thrust as well is, can you do something which helps the country level up its health inequalities. I think if you can tell a story and substantiate that story through the care that you're providing, to focus on those areas, you'll go a long way to establishing strong relationships with the National Health Service. So position yourself as somebody that can be a partner for the long term.
Casper, Kevin, do you want to add anything to that?
Yeah, I think from a European perspective, it is, I mean, health is funny because the blueprint of a human body around the world is pretty similar. Yet we afford 180 different healthcare systems, which uses the same therapies, but pay differently for it. So if you want to be somewhat independent and applicable in any healthcare system, we already said, best way is to do something, offer something new, better. And the big challenge is you need to have the time and the patience to prove that what you offer is better. And I think in the healthcare system, there's only one way which is accepted, that's clinical data. So if you want to bring something new to the table, be it in England, in Germany, in Switzerland, or in the United States, you need to have a very sound clinical case that whatever you want to offer to any system is better, treats patients better, makes them healthy faster, and costs less money. And this needs to be proven with science, with clinical data, with clinical studies.
Thanks. Great. Great.
Just to add, Jim, I think, of course, the question begs, you know, are you a buyer or a seller? That will have a different perspective. But if we take, certainly in pharmaceutical terms, if you're in a seller, I think there are a number of things. Clearly, the IP in the business, and that may not be pure IP around the asset, but it might be, you know, barriers to entry, which could be seen as being give you a sort of competitive advantage. Again, I think how differentiated your offering is, you know, in terms of your product portfolio or perhaps your routes to market. These are things that are going to be attractive that you can build on. I think also, again, a buyer would be looking, you know, is there still growth in this model? Is there still growth in this business? And you know, that may be things like exports or geographic expansion or other things like that. I guess last but not least, certainly in the private equity world, it's about growth, and therefore, you know, some future pipeline opportunities would be attractive as well. So the whatever growth you've had historically, that is sustainable. Now, doesn't mean to say you're going to get an absolute premium in your valuation for that, but it's an important consideration is, you know, does this company have a sustainable business plan that can deliver growth over the next 3 to 4 years? So I think those are some thoughts around you know, the options for the seller for sure.
Position yourself where there's going to be sustainable growing income. That's the secret. Thank you, Kevin. Yeah. I think we've only got slightly over 10 minutes left, so I'm going to skip on now to our guests' questions that have come in. The first one is if a business owner is excited by the new opportunity but doesn't have the money to expand, what can he do?
I think Jim, can I say here at this point, we deserve a break. Why don't you take that?
Paul, thank you for cracking the whip. Yes, okay. If I were to focus on the market that we at Corbett Keeling and indeed our partners at Carl Square address, it's sort of broadly speaking, private businesses making $1 million to 10 million, I'm talking sterling, but euros maybe similar, profit. And assuming the business isn't in terminal decline, assuming it's got some sort of good qualities to it, the answer absolutely is that you can raise funds. That business can raise funds. At that scale, a business can raise funds, either debt or equity. So the question is not can a business raise funds or can that business raise funds? It's much more, is the owner prepared to take on debt or equity? So are you as the owner prepared to take on debt or equity? And if the answer to that question is yes, then the next question is how to set about getting it at the best price with the minimum interference in your business. And that's about presenting your business case as effectively as possible to the funders and having the best possible access to those funders. But the starting point is that for businesses in that bracket, certainly, you can raise money. And the question is, do you actually want to take on the debt or the equity? Is that a satisfactory answer, Paul?
I think that's excellent, Jim. Thank you.
Okay, I'll go on to the next question then, which is, if a business owner is thinking of exiting in the next few years, would this be a good time to do so? And do you think acquirers will be prepared to pay a full price? Well, Casper, maybe you started to answer that earlier, but perhaps could pick up on that.
Yeah. When we are asked this question, is it a good time to sell my business? We normally respond by suggesting to look at 3 different timelines who are kind of independent, not entirely independent. So the first question is it a good time from a macroeconomics point of view? Obviously, if there's a bullish market, it's easier to sell a business. If all the markets go down, if there's a big crisis, then it's harder to sell a business. Now, currently, we are in a deep crisis, but as I said earlier, the life sciences sectors don't seem to be affected by it. So prices are at all-time high. So I think from a macroeconomic point of view, although we talk about crisis, that is not the case for businesses in the healthcare and the medical device sector. The second timeline to look at is the specific dynamics in your sector, in your industry sector. And it's always good to sell if there is an increased pace of consolidation. So if emerging market leaders want to grab market share to build, defend an oligopolistic situation. And this very much depends on which type of business you're in. But the big oligopolists, they very carefully look for the next innovation. They need to pick to defend their position. And I think now with the disruptions going on, and if you have a company which has validated new technology, which has proven to be able to show winning market shares and is doing that profitably, I think that might be a good signal that also the sector is good for exiting. And the third timeline is your business ready to be sold? Have you done your homework? Is the company managed well? Has it done everything to have a good profitability? Is the team there? Are the reports showing the results in a way that everybody else can manage the company and take over? So that's maybe the third timeline. This very much depends on the company. But I think to the first 2 things, most of the time it's a tick in the life sciences and health sectors.
Thank you, Casper. That's a pretty comprehensive answer, Paul and Kevin. Do you want to add anything to that, or shall we go on to the next question?
Jim, just two very quick points, and I guess just a consideration. I guess businesses have got the spectre of Brexit to think about, particularly in the pharma sector, disruption of supply chains. Does that push someone to say, well, it's time to exit? I think COVID uncertainty has certainly impacted a number of companies. I think some of that's recoverable. And I guess the third point is, in terms of fiscal policy in the UK, are we going to see an impact on capital gains, which may drive owners to say it's time to bank some money? So those are some considerations, not necessarily a yes or a no.
Yeah, I mean, I am not a banker, but it seems to me that we have common problems all around, certainly in the developed world, an aging population, a population which is getting unhealthier, and it costs roughly 3 times the cost to treat a 70-year-old as it does to treat a 30-year-old, and it's 8 times to treat an 80-year-old. So I don't see that the healthcare market is going to do anything but grow during a time exacerbated by COVID, where the economic circumstances is likely to be the government budgets are under pressure. So an exploration of the way to take advantage of private providers' healthcare provision seems to me just to be logic.
Thank you. Thank you. And okay, that's really helpful. Where do any of you have a view as to where the focusing in on the UK market at the moment, where the majority of buyers are coming from? Are they UK? Are they overseas? Are they? How does that pan out?
We've had a look at some of the data over the last couple of years, and in broad terms, roughly 50% of acquirers are domestic and 50% international, with a slight leadership in the international category for companies from the United States. The figures for acquisitions have been relatively stable, doing about 60 to 80 in each half over the last couple of years. It does strike me that as we go through Brexit and Britain aims to become a brave global player, that there might be access to greater acquisitions from the United States and perhaps the Far East as well, particularly in large-scale system integration and technology platforms.
Okay, thank you. Thank you. And that actually leads quite neatly into the next question we've been asked, which is why do, I mean, it's quite a high proportion, 50% of acquisitions roughly come from overseas companies. Why do overseas companies find UK companies attractive?
Shall I answer this as a non-English, non-British member of this panel? We non-Brits envy the UK for the quality of its science. The United Kingdom is part of the Anglo-Saxon scientific community, which is by far the largest, and including the United States, also the one producing the highest impact in medical science. And so there's a lot of very good science in medicine being produced in Great Britain. So the other aspect about science is there's a high quality and a high number of startups and innovation being spun off the British universities. That has been predominantly in the software space. So great artificial intelligence and software companies around the renowned and famous British universities, and including London. There seems to be a very good in England. So I don't see this stopping. It hasn't got anything to do with Brexit.
Thank you, Caspar. And does the Anglo-Saxon legal system as well also do this equation, do you think?
Hard for me to comment. What I see is, whether it's the legal system, I don't know. It is certainly London as a financial hub, which makes funding makes funding and access to funding easier. It's a high degree of sophistication of all sorts of financial products being able to support growth and innovation. And how this turns out after Brexit, I don't know, but I cannot see London go away.
Hopefully not. We're hoping not, as I sit here in the middle of London. And the one final question, we've only got about a minute to answer this. So maybe sort of snapshot answers would be hugely appreciated. There are many sort of barriers to entry which one can instinctively see in the health and life sciences sector. Which of those do you think are the most valuable?
Shall I start? You're probably gathering that I am both poacher and gamekeeper in this, coming at this from a kind of NHS background. But the NHS wants to hear about care. So being able to demonstrate that your healthcare offering has a positive care effect and that it's grounded in improving care outcomes is absolutely critical, I would say, to success.
Okay. Thank you, Paul. 20 seconds, Kevin, then 20 seconds, Caspar.
Well, Jim, I suppose the short answer is having some sort of IP around your product in pharma is the main barrier to entry. And if patent has expired, I think it's trying to build something around the manufacturing perhaps, or the API source, but try to build some sort of level of IP that gives you that protection would be the simple way forward.
Brilliant. Thank you. Caspar?
There are two regulatory hurdles. One is the technical one, so you need to be allowed to sell the product. And then there's a financial one. So once you're allowed to sell the product, you need to find somebody who's paying the bills. And what you need to have for both instances is, as Paul said, evidence, clinical data. Second thing, clinical data. Third thing, clinical data. This helps you to move across these two hurdles.
Okay. Thank you. Thank you. Well, we've reached the end of our allotted time. And so it just remains for me to say thank you to all our guests for joining us. And I'd like to sort of clap our panelists or something now, but I'm not sure that really quite works on Zoom. Thank you to our panelists for joining us this morning and for leading the way. As I said at the outset, the session has been recorded. It'll be sent to you. If you've got more questions, please do ask them to us. Paul and Kevin and Caspar are all colleagues of ours at Corbett Keeling in different ways, and we would like to answer your questions. We'd like to get to know you better over that if you've got further questions and further follow-up. So thanks again to our panelists. Thanks to our guests. I think we wave goodbye to each other at this point. That's the end of the webinar. Thank you.
Thank you.